Good afternoon, everyone, and welcome to today's FinXTech Exchange. I'm Lexi Grindstaff, Director of Business Development at Bank Director, and we thank you for joining us today. This FinXTech Exchange webinar is focused on alternative cores and brought to you by Bank Director and sponsored by West Monroe Partners, Finsley, and Persistent Systems. Before we get into today's discussion, let me share just a few housekeeping items. First, you have joined this event in listen-only mode, so you are automatically muted. Second, for a better viewing experience, we recommend that you use the slide bar on the bottom of the screen to put the presenters into full screen mode. Also, we would love for you to ask questions during today's presentation. So at any time, if you have a question for the presenter, please note those by clicking the Q&A button found on the right side of your screen. There is no need to take detailed notes. This recording will be shared with all attendees within 24 hours via email, and it will also be posted to bankdirector.com. And lastly, if you have any technical issues today, please note those using the moderator chat feature on the right-hand side of your screen, and we will do our best to take care of those. So I am going to introduce our speakers today, and as I do, I will ask each of them to turn on their cameras so we're really able to put a face with a name. First with us today is Sekhar Katkam. Sekhar is the General Manager at Persistent Systems and is responsible for strategy, solution development, and execution for the banking, financial services, and insurance industries. Sekhar brings 25 years of experience to today's conversation. Thanks for joining us.
Thank you, Lexi. Thank you for having me.
Of course, yes. Next with us is Brett Mastali, and Brett is a partner at West Monroe Partners, and he works with banks and credit unions designing and leading optimization projects using best-in-class loan origination solutions built on state-of-the-art cloud-based technologies. Welcome, Brett.
Thank you, Lexi. Good afternoon, everyone.
Today, we also have Bhushan Ranachhardy joining us, who is the founder and CEO at Finsley. Finsley connects FIs with customers through a modern digital experience and an efficient real-time payment solution. I'm hearing a bit of background noise, so we will just go ahead and move forward and try our best to work on that. So now that we've met all our presenters, I'm going to jump right in. Sekhar, first question is going to you. I would love if you could provide some insight as to why mid-sized and smaller institutions are looking towards alternative core platforms.
Thanks. Great question. I think to answer that question, we got to first understand what's there in the core alternative against the traditional monolithic cores that existed for so long. I myself have worked with, having worked with two large popular core banking platforms, I've seen the evolution of and the limitations of the core platforms, the monolithic, the traditional core platforms. But thanks to the cloud technologies and the fast adoption of cloud, what has happened in the past few years is microservices, APIs, the whole composable architecture has taken a new meaning. So today, if you look at the mid-size and the smaller institutions are kind of caught in between, you have fintechs on one side and the large banks who've had all the resources on technology on the other side. So the platforms that we've had in the past and still exist, most of the banks still are running on those. That's why I'm using that word monolithic platforms. Any small changes. I've been a product manager. I've been a global implementation manager for one of them. I've seen even small changes asked by the customers used to take so long to even develop, test, release, and things like that. So it's virtually impossible to even plan your digital roadmap on this. So in today's world, the smaller institutions they got to move fast and to be able to kind of launch products and services in a very accelerated manner. So for that, we have these alternative cores which are deployed on, it's basically cloud native, API first, microservices based platforms, which are working on these smaller services which are glued with these APIs. So any changes made on one side, whether it's say loan services or deposit services, these are all like apps. So it's much easier. Yes, there are challenges to it in terms of the integration, some of the security issues, sure, will get fixed very easily. But that's where I think the mid-size and the smaller banking institutions need to look at. That's the reason why they need to look at an alternative core. It's not about making a change anymore. It's all about survival. It's all about being relevant in today's banking landscape.
Yes.
I hope that answers.
It does. Thank you. And Bhushan, would you agree that now is the time for this core transformation to take place?
Absolutely. So if you look at the transformation, there are three options, right? One is the banks can just maintain the status quo, don't do anything about it. And then option two, rely on the core. And third option is, look for an alternative core or parallel core. So the status quo, nobody wants to maintain that one because, that's the biggest enemy, and, it's not going to help the bank to grow. Most likely the bank may get acquired and they are not going to be competitive enough, comparable to other neobanks and digital banks. And, relying on the core is a problem, right? All the cores, they have a huge revenue coming from maintenance, and they don't want to disturb that. Why would they don't have an incentive to innovate. So if the banks are relying on their current legacy core providers for innovation, I think they are going to be disappointed. And even if they do it, any innovation they have to build on top of the legacy core, which is 30-40-year-old mainframe COBOL systems, is going to be 2 to 4 year projects. And by the time you complete that, you're already behind the innovation, and a lot of things have changed by the time. If you look at fintechs, they are releasing new products and services every 6 months. And if the bank wants to compete, they want to keep with this speed, with that pace of those innovation happening elsewhere. So the only option is now for the banks to innovate outside the core. When it comes to the innovation outside the core, there are two options again. They can look for core replacement, or they can look for a parallel core, right? So the core replacement, again, it's a very risky process. It is very disruptive, and you have to invest too much of time and money to just get you, to a better place. And it's not going to, help you much, except that, you have moved from one core to another core. Each core has its own problem. So the better alternative approach that, that FinXTech recommends, and we are working with a lot of banks, is that, hey, let's innovate outside of the core. Let your core do whatever it does for the legacy products. No one complains about their banking system going down, the statement, having incorrect amount, the logbox, and everything that the legacy customers need. Let it be served by the legacy and the core banking system. And whatever you need to innovate, outside, whatever you want to innovate, compete with those fintechs and neobanks, let's do it outside in a digital core. So running a parallel core to that one is the right approach. And the time to act that is now. If we don't do that, we are going to be falling behind those innovation curves. And every bank is innovating now. If you look at, there are a lot of mergers are happening. The main reason is because they want to bring that force together and focus on more innovation. The Truist, the Centrist and BB&T merger is mainly focused on innovation. They want to bring those investment dollars together because it's expensive to innovate. So, it's already happening, and I would certainly say the time to act is now.
Thank you. And you made a good point about just from the competitive standpoint that this is the time. So building off of that, Brett, what would you say are some of the other risks to middle market banks if they don't consider a core project in the next few years?
Yeah, absolutely. I mean, Bhushan raises some great points. I mean, I think there's a series of both internal and external drivers that are going on, and some of those we've discussed. There's obviously a huge push in the marketplace right now on M&A within the middle market. Banks are either desiring to grow organically or in many cases inorganically. I think that that's driving a lot of these drivers. I mean, internally, you're looking at high operating costs for banks to continue to operate, both financially as well as from sort of the historical customization mindset that's been prevalent for decades of continue to sort of adopt a patchwork mentality to fixing cores. That's obviously leading to lower response times to meeting customer demand, new innovation, new products. So that's a huge issue from an operating cost perspective. I mean, externally beyond the M&A, I'm of the opinion that the industry is at a crossroads where middle market banks are not necessarily just competing against themselves or larger banks or smaller banks, but they're really competing on the experience level. And so the Amazons and the Googles and the larger technology companies are adopting experiences that all of us are sort of leveraging as part of our day-to-day life. And I think a core platform within the middle market is going to be fundamental to sort of managing that risk and meeting it. And in many cases, and one could even argue that Amazon and others are even trying to get into banking. But even if they're not, those experiences are changing the way we think about all things digitally, including banking. And then the final one, I think, is just growth and scale overall, which we sort of have referenced. The ability for banks to grow, to be innovative, to introduce new products quickly into the market, to leverage the fintech landscape are all drivers. And so the overall response time and the need to meet the market is accelerating. And so that's really reducing lead time and the ability to get new solutions into the market. So some additional risks to give thought to.
And Brett, I'll stay with you for a second. So how would a bank know if they're ready for a core implementation?
Absolutely. That's the big question. I think really, as a bank needs to think about core, it's well beyond what banks typically would adopt, whether that's a new CRM or another technology or a channel-oriented platform. Core being sort of the traditional brain surgery of technology transformation. That readiness is key. I think before we sort of get into some of the elements of whether you're ready, I think having some folks in your corner, whether that's sort of a board, leveraging board, or an independent oversight or advisory to really helping you tell the story is going to be key. From a readiness perspective, obviously the traditional levers of do you have true business sponsorship beyond the technology aspects seems to be a very collective, collaborative effort across all the channels, lines of business, both back, middle, and front office, and really weaving that into the story. Strong enterprise governance, which needs to start from the top, need to have stakeholders that are really invested in sort of the end game of what this solution looks like at the end of the day. Moving sort of down the chain, robust program management capability. I do think that PMO and PMO capabilities are key, but anytime you sort of adopt this type of a transformation, you're really looking for resources and talent that are focused on true program management with a delivery-oriented mindset. It's going to be a lot of moving parts, as we all know. And then, of course, the resources and skills beyond the program management office, making sure you have a blend of both supervisory as well as sort of user experience within each of the groups, deposits, lending, and all of the areas that touch a modern core platform. And then really, sort of the intangibles of bank culture and change, evaluating how have you historically adopted change from a technology perspective? Is the bank culture ready for this type of change? And being honest with yourself to determine whether or not this is the right time, or do we need to think about enhancing that aspect of your overall, bank before you sort of jump into a core. And then ultimately, the business case and making sure that you have the right drivers around that and you're looking through it the right way is probably the final dimension of that around readiness.
I think those are great points. And Sekar, you touched on this a little bit in your opening remarks, saying that a roadmap is really difficult for this type of project. But let's say that a bank has decided that now is a good time for core transformation. What would that roadmap look like for adopting a new core? What's something that they could expect there?
Yeah, obviously, a lot of banks and credit unions have waited too long and did nothing. So that's not an option. So, obviously, I think Bhushan and Brett both touched on this a little bit. Because of the complex nature of these projects, I don't think the option to fully rip and replace is a great option at this moment. I would say that, banks willing to kind of go in the digital route should go and invest in a digital platform, whether it is just the digital lending or digital deposits platform or a completely cloud native digital core as part of a larger dual core strategy where they could actually move all the new digital business, whether it would be for a new segment of the population or primarily for a new product that is being launched, things like that. So they could operate that, move all that business into the new core. And then over a period of time, obviously, after having learned and understood, because today these projects, it's not just about the core. There are so many other satellite systems that feed out of it, right? Core is just the back-end processing engine. And you got to also kind of live with this whole thing about fintechs, because today banks, kind of concluded that they could compete with the fintechs, but I think it is better to partner and collaborate with them. So Brett talked about the customer experience piece of it, which the fintechs actually own it. And we have seen the whole structure of, the sponsoring bank. Sorry, I forgot that word. Sponsoring bank. We see where fintechs are using the bank charter. And many of the banks are actually pushing to change their core just for that particular purpose. So that because the fintechs are totally relying on providing that entire customer experience, which some of the traditional cores cannot provide. So I think the roadmap should include a hybrid or a dual strategy where they actually start with moving some of the digital businesses or some new product launches, etc., onto the new core, and over a period of time transition in a gradual manner to that new core rest of the business.
Thank you. And Bhushan, you touched on this earlier too, but many FIs do rely on their core for innovation. So how have you seen this play out in your own experiences?
Yeah, I think Shekhar kind of alluded to offloading one piece at a time to a new core, right? So we have been working with banks. For example, we have a bank that's sponsoring a lot of fintechs, and they wanted to have a better payment solutions, right, with an APIs where the fintechs can call the APIs through the for your payments. And this bank is taking the path of adding ACH payment services first, and then next 3 months later they will be adding wires. Next they can add real-time RTP payments, and then in 2023 there is going to be Fed now, and then who knows, there is going to be a lot more payment rails coming down the line. Right now we talk about US the dollar digital currencies that is going to be coming up as well. So I think when it comes to the strategy, what we are seeing here is, and what we are also advocating is, there is no way that you can win everywhere, right? You have to take a path where, start winning one thing at a time. If there are certain customer base, win that customer base, then focus on the next customer base, right? Next, like that. So to do that one, you need to have a solution that are plug and play, that are, app based, where, here is my customer. and I want to start focusing on enabling a better payment experience. Next, I want to focus on business customers. Next, I want to focus on enabling foreign exchange, right? So these are the things that that banks can undertake one at a time, and that's exactly the kind of solutions that you want. Should be modular, should be plug and play, and so that banks, if you look at the priorities for the banks, every bank have different priorities. Their customers are different. The markets they are serving are different. So there is no one solution that can solve every bank's need. So when you are looking for alternative core, it is important that the core is flexible enough to help the bank start where they want to start. The end goal is going to be the same. End goal is, hey, we want everything converted over and focused and built with a better experience. But you need to have a path that gives you the flexibility of choosing whatever you want, right? So that's the kind of trend that we are seeing, and that's the kind of trend that we are also heavily advocating, because ripping and replacing and going everything in one go will always leads to failure. Going one thing at a time, releasing one new product, adding more products, more features, that's the path to winning strategy.
Great, thank you. And Brett, why do you think that a bank would consider an alternative core versus a more traditional provider?
So again, I think Bhushan sort of and Shekhar sort of referenced the journey of the core. I mean, fundamentally, are the alternative cores ready for sort of that full end-to-end replacing the traditional? In some environments, maybe so. But again, I think it really comes down to sort of the enhanced digital experience, the ability to sort of create a flexible, innovative mindset around product development. Ultimately, the focus becomes on the customer. If they can sort of put a core in that introduces those solutions and meets the customer experience and overall customer engagement, I think that's key. Within that same realm, you don't really need to have a full traditional IT department, a DevOps function with an alternative core. So there's obviously, it provides you with a lot more flexibility in the cloud. But I think what's being referenced is sort of this modular based approach and starting small in the journey. And so maybe it's a white label offering, maybe it's one line of business, but getting started and getting thoughtful around if your traditional core, if you're on a 4 or a 5 year contract and you're a few years away from that, starting to give thought to that alternative core and what that could mean for your overall banking experience and sort of growing into it. There's obviously a lot of risk doing any sort of a core replacement. Alternative core would be no different. But I think it really comes down to being open banking, digital, the API. A lot of what my colleagues here on the phone have referenced, it's sort of that innovative mindset that you're just going to have that flexibility with an alternative core beyond the traditional big three.
Thank you. And we did have a question submitted. So Shekhar, I'm going to go to you first because it references a little bit of what you were talking about in the beginning, and anyone can feel free to add after. And they are asking, can you please define a mid-sized bank? And is there a size where this wouldn't be a good strategy? Oh, and Shekhar, I think you are muted.
I'm sorry. Obviously, when you say mid-sized banks, I wouldn't really go and define an exact boundary of assets under management or whatever. But I think I would say, obviously you have one side, you have the top 10 banks. That's a completely different segment. Then you have these big regional banks. Many of them have gone ahead and done the 5 years, 6 years roadmap, maybe 7, 8 years back. They're still working through that journey. I would say the community banks up to a size of 10 billion or so, let's say from half a billion, I would say even 100 million. Anything below 100 million, I would still say that the alternative core make sense, but the strategy has to be a little different. I have seen Persistent. We have actually launched a couple of fintechs. One of them being in the space of buy now, pay later, the point of sale lending platform we have brought to a few credit unions. And they're pretty small too, but they're much less than 100 million or so. But the way they looked at this whole space was, they said, if we have to increase our lending business, we'll have to find alternative ways of doing it. So they felt point of sale lending could be an innovative way for them to differentiate among so many bunch of banks and credit unions out there. So they did take that path, and they obviously did a 5-year business plan where they saw that, by doing all this, they're actually saving a lot of money. And they're actually plowing that back into this whole platforms integration. And many of these platforms are cloud-based, so you're not really owning a big infrastructure to do it. So the running costs are much lower as well. So I wouldn't really put a number or a range of assets or anything. So I think it's obviously based on 2-3 things. Where you stand. I know that many of these mid-sized banks have started the journey already. It depends on where you stand today. But again, we work with a number of credit unions, and in fact, we work with NAFCO very closely. Just recently, we heard, I think Brett was talking about M&A piece. There are 5,000 plus credit unions in US, and I think the NAFCO president said they would probably go down to 3,000 or so in the next 10 years. So I think instead of worrying too much about the size, of course, the business case will have to point out the benefits and the costs. But I would say that, the size is not really important. You should go and define your own strategy, because if you're trying to replicate the strategy defined by the top 10 banks or the regional banks, that's not going to be beneficial to you. You got to obviously look at what others are doing, where you want to be in the next 5 years or 10 years. Based on that, you can work backwards and do that. Do you want to put up a structure like a sponsoring bank, bring in all the capabilities from fintechs? Do you want to build all that in-house? It all depends on that. So I wouldn't really put a number on that.
Bhushan, do you have any thoughts to add there, or would you agree?
Yeah, and I would say, any bank who don't want to rely on their core, right? There are banks who have a contract that they cannot go outside of their core, and we have seen banks, anywhere in the range of 500 million and above. They are the ones who are willing to go outside of the core, right? So whether you take online account opening, or digital experiences, or payment platforms. So these are the banks who say, hey, I don't, my core is not giving what I want, and I'm looking for very unique and sophisticated experiences. Let me add the payment engine, payment hub, or let me add this digital experience. Let me add this digital account opening. So any bank, to me, whether it's small, big, or large, the technology enables innovation for banks of all size. If you are small, you start small, and if you are big, you can grow with the technology, right? The cloud, the microservices platform exactly does that. So I would say any bank who is ready for innovation, right? Who wants to compete, who wants to survive, who want to thrive, not just survive. So those are the banks who are ready for a alternative core, who are ready for a parallel core.
Lexi, can I add to that?
Yes, quickly, and then we have another submission.
Yeah, no problem. No, I think Bhushan kind of alluded to it, but I think many of the banks that we keep talking to, they say that they're stuck in a long-term contract with the existing core provider, so they cannot even plan to do anything outside that. I think that's where you have this whole dual strategy, migration strategies, etc. So there are options available to even somebody who's stuck with a long-term contract for next 7 years, 10 years. That's why there is a journey. This whole thing is a digital journey. So I think, but you got to plan in advance. If you got to look into the next 3 years, you got to do it now.
That's great. And I think that that's a point that we can maybe dive into more in the peer exchange groups if someone is in a longer term contract and kind of what are the options available. Now we had another question submitted, and Brett, I'm going to go to you. And they're asking, what are your thoughts on legacy core providers' API marketplace offerings? So they said, for example, Xchange or Code Connect, and how do they stack up against alternative core technology?
That's a great question. The big three have certainly made quite the push and are trying to sort of modernize those platforms. Just kind of going through the big three, and we'll just, looking at the Fiservs have adopted some real-time technology with their DNA solution, probably the one of the biggest cores right now globally with that real-time capability. The FIS with the Code Connect, that's obviously received a lot of press. It's starting to get some traction in the marketplace. Jack Henry as well is starting to increase sort of some of their treasury management capabilities and some other feature functionality. Collectively, each of them are trying to make a big push. There is still, I think, from an API perspective, a bit of a maybe not fully closed API structure, but certainly not as open or open banking as the alternative cores are offering. And in most cases, or if not all those cases, that despite the fact that they're sort of putting some front ends and an open banking and some digital capabilities, all of those cores are still based on legacy architecture, whether that's what I typically refer to as sort of the green screen type programming from yesteryear. So they're obviously aware of the competitive environment, and they are making a push, and they do have some capabilities. And then beyond the technology, just as a point, and it was brought up, I think Bhushan and Bolsekar both raised it, they're still pretty inflexible in sort of the contract in the way that they arrange it on a per transaction and cost and API and all of that, which I think is limiting them. But they're obviously aware of the market and they're making changes, but no one of them have sort of gone all the way back to the drawing board and started from scratch like the alternatives have.
Thank you. I think that's really helpful. I will say we're getting a lot of audience questions. So like I said in the beginning, we will do our best to get through all of these. And if we don't happen to, we have 45 minutes of peer exchanges, which will be a great time to do that as well. So I think that this is an interesting question. And Sekar, we can start with you. And again, anyone feel free to add. But someone is wondering, what is the rule of thumb of what a bank should be spending on their core and auxiliary services?
Sorry, I missed the last few words. I couldn't hear.
So what's the rule of thumb of what a bank should be spending on their core services?
Again, when we are talking about alternative cores, so I don't want to again put a number to it because it could be different depending on what you want to implement. But I think if you're adopting a cloud native digital first API kind of platform or a solution, I think these things come at a much, a fraction of a cost of a large monolithic code platforms that they've been spending on. So, at least at Persistent, we have launched, completely composable platform. It's I can talk from that experience. We have launched a couple of neobanks in the UK region within 4 months or so, and we have actually launched a solution, a pre-built, pre-integrated solution for the US market, both for community banks and credit unions. They can do the whole thing within less than $1 million. Again, that's for the whole 9 yards. If you're just going to do a digital onboarding, it could cost as low as $250K or something like that. So it again depends on the kind of modules or the kind of functionality that you want to use, but it could range I wouldn't consider it to be a mega multi-million dollar projects that we have seen in the past. So yeah.
Really helpful. Thank you.
Yeah,
So
I
should
would
it
say
be,
like it depends on where you want to start, right? If you are taking up simple things like a digital account opening, it can just cost only a couple of $1,000 per month, right? You can start there and then you can grow there. But if you're looking at payment transformation, it again, the budget that kind of the technology budget for banks is, we are seeing an average of, including the core, it's about 10-12% of the revenue, right? That's how much the banks typically spend on, in addition to the other, the workforce they are spending on. So, again, it all depends on where you want to start. There is no one answer. It depends on the size of the bank. It depends on where you want to start. Digital account opening or payment innovation or digital experience innovation or business banking. So it basically. But the thing is, the good news is that irrespective of the size, the technology makes it available and affordable for banks of all sizes. That's what I can say.
great, great. I'm just looking here to see where's the best next place to go. So let's look at how to best build an R&D type culture to look at these type of opportunities instead of relying maybe on the core to vet the fintechs for the banks. So Brett, do you have any insight there on how a bank could really start to build that culture?
So building a culture that brings the resources and technologies to bear prior to a core, is that just making sure that I get the question straight? Is that?
Yes. Mm-hmm.
Obviously, there's a war on talent, so any sort of modern technology and folks that are familiar with both data and integration platforms are going to be key. Folks that are familiar with automation technologies are going to be key. Starting to build and think about, sort of a DevOps mentality around those folks. Administration folks that are sort of the super users of the platform, but can administrate on these cloud-based and flexible, configurable environments are all going to be key. Beyond the core, I think foundationally, the core, I mean, again, it's a journey, and we've talked about a journey here over the last 40 minutes or so, but yeah, I mean, thinking about your data platform and enterprise integration layers are going to be foundational to sort of establishing that lab or proof of concept or however we want to call it mindset and really understanding those elements in advance of a core. And so having both the people, the process, and the related technologies around that, I think are going to be key in advance of whether that's an alternative core or a more traditional core. All, I think, key elements, again, for any size bank or institution. I think the one thing that we've definitely articulated here is that these alternative cores have sort of leveled the competitive playing field across banks as small as 500 million all the way up into the billions, and anybody can build a lab around this or a team to make themselves ready for this over the next few years.
So I will just say to add to that one, when it comes to the R&D, right? The small community banks or any banks up to maybe 5, even 10 billion, they don't have a separate R&D team just to focus on R&D, because bankers are supposed to be do banking. They're not, R&D, technology folks. But what they do have to do is they have to find a partner who can hey, I like the solution. Does not require a lot of upfront investment, but I want to try this one. So you want to be able to have a platform that allows you to have innovative products, add, just trial and error. I want to launch this one, see how it works, and then move on to the next one. So you certainly need a platform or a partner who can work with you and allow you to innovate. And instead of relying on, for example, my son, he just joined a university and there is a credit union where he wanted to open an account. I asked, do you have Zelle? and they don't even have Zelle. The core providers are still not able to catch up, even though it has been released, 4 or 5 years ago. So I think it's a cost prohibitive for banks and credit unions to adopt these technologies. Now think about RTP and FedNow. They are coming in RTP is already there. FedNow is coming in another year. Should the banks go through the same pain? The answer is no, right? There are alternate options that banks can adopt, credit unions can adopt, and that's the way to go forward.
Great. Well, we are getting close to the end of the webinar portion, but before we break into PureXchange groups, I think it would be helpful if we went around the virtual room and if you all just gave your best piece of advice for banks or credit unions that are considering modernizing their core. Sekar, I'll start with you first.
Yeah, I think we talked a lot about this, so I'll only say one thing: start it now. And have a roadmap for the next at least 2 to 3 years, and obviously it has to be based on the business where you want to take your business. Technology comes later, so have a roadmap, plan it now, don't delay it, and you can start executing immediately after. You have options. There are many options available out there, so plan it now.
Bhushan, what would you have to add?
Yeah, so again, we talked about innovation for everyone, right? The technology is democratized, and everyone can adopt this innovation. Customers are looking for better experiences, and we need to be able to offer that one. If we don't, they're not going to come and ask us, hey, can you do this one? Can you add Zelle? Can you add this one? They're just going to find a different institution who are going to provide that kind of experience, right? They're going to move on and find a better solution elsewhere. So it is very important that we stay competitive. We offer the products and solutions the customers are looking for, and the solutions are available outside of the core. I think that's the main purpose of this alternative core discussion today. So the solutions are available, and better experience, real-time payments, embedded experience. Like for example, you take Uber, you never have to take your card and swipe it. It's all part of the lifestyle. So the finance is becoming the part of the lifestyle. Is your bank ready to support that kind of lifestyle today? The answer is no. So it is important that you take the path of innovation, partner with whoever you like, and whoever can take you to the level there where you want to go. And that's the only path to compete and win, right? It's not just about the survival. It is about staying competitive and delivering a better solutions, better experience to our customers.
And Brett, can you give us some thoughts to wrap us up?
Sure. So emphasize the overall enterprise governance, strong governance, flexible decision making, and open-minded mindset as you approach the journey. Do not become transfixed by the overall business case and get way focused on numbers and what type of growth you anticipate in the market. Those degrees of separation are probably a little bit of a fallacy. Do focus your business case sort of on labor savings and efficiency and automation, and grounded in that. However, I think that where we are in the industry overall, the business case needs to just be one element of this decision. And a lot of what we've spoken around today around the experiences, the open banking, the digital-oriented mindset, make sure that you weigh in those qualitative events. And because the payback periods on this are obviously very long, so it's going to be hard to make a business case justifiable. So think outside the box as you're building out that case and really looking to the future.
That's great. Well, I want to thank each of you for your time today. Sekar, Bhushan, Brett, thank you so much. And as a reminder, we will send out a recorded version of this webinar within 24 hours, and it will be posted on bankdirector.com. So at this time, we are now going to transition to the PureXchange portion of today's event. These exchanges are exclusive to our bank attendees. So if you previously indicated that you would be joining the exchanges, we have broken you into small groups, and a unique Zoom link was sent to you on August 18th via email, and also earlier this morning from Lucy Taylor, who's been doing a lot of work to help create this event. So if you can pull up that email, click on that link, that will allow you to join the peer exchange groups, which are happening right now. Thank you.